Remember 2008, the financial crisis? Yeah, good times. Well, right after that mess, Bitcoin popped up. Created by the mysterious Satoshi Nakamoto, who's basically the Banksy of finance, Bitcoin promised a new way to deal with money. No banks, no governments, just pure digital cash. It uses this fancy tech called blockchain, which is basically a public ledger everyone can see. Think of it like a Google Doc for money, but way more secure and impossible to cheat. Ethereum came along a bit later, like that friend who shows up fashionably late with better snacks. Created by the very not-so-mysterious Vitalik Buterin, Ethereum is like Bitcoin's cooler, more versatile cousin. It's not just a currency, it's a platform for building all sorts of cool stuff. Think decentralized apps, smart contracts, and even digital cats you can own. Don't ask. So basically, blockchain is the tech, Bitcoin is the OG digital gold, and Ethereum is the Swiss Army knife of crypto. Got it? Good. Let's move on. So, why are people so obsessed with crypto? Well, for starters, it's the ultimate stick-it-to-the-man investment. After 2008, everyone was pretty over banks and their risky bets. Cryptocurrency was like the financial equivalent of going off the grid, plus there's the whole scarcity thing. Just like gold, Bitcoin has a limited supply. Only 21 million Bitcoins will ever exist. This makes it valuable, like a limited edition Supreme brick. Seriously, Google it. And then there's the meme factor. Dogecoin, Shiba Inu, all those dog-themed coins, pure hype. But hey, sometimes hype is enough to make you money, and then lose it all the next day, but let's not dwell on that. The point is, crypto is exciting. It's volatile, it's risky, and it's got that Wild West vibe that gets people's blood pumping. It's like gambling, but with a veneer of technological sophistication. Now, imagine you're a government. You like control, you like taxes. And suddenly there's this whole internet money thing happening that you don't understand. What do? Well, if you're most governments, you freak out a little. Some countries like China have gone full-on ban hammer, making it illegal to do pretty much anything crypto-related. Others are trying to play catch-up, scrambling to create regulations that make sense in this weird new world of decentralized finance. It's like trying to fit a square peg into a round hole, except the square peg is constantly changing shape and the round hole is the global financial system. The point is, governments are still trying to figure out what to do with crypto. It's a brave new world out there, and the rule book is being written in real time. Ah, America. Land of the free, home of the confused when it comes to crypto. The US is trying to walk a tightrope fostering innovation while also, not letting the entire financial system go haywire. The SEC, the guys who regulate Wall Street, are eyeing crypto like a hawk. They're trying to decide which cryptocurrencies are securities, like stocks, and which are commodities, like gold. It's a messy process, and everyone's just waiting for the other shoe to drop. Meanwhile, the IRS wants its cut. They've made it clear that crypto gains are taxable, which, let's be honest, is about as surprising as finding out your grandma loves fiber. But hey, at least they haven't resorted to accepting Bitcoin for taxes. Yet. The US is a major player in the crypto world, so what they decide to do will have ripple effects globally. It's a delicate balancing act, and the jury's still out on whether they'll stick the landing. Section 5, Across the Pond and Beyond, a European crypto safari. Over in Europe, things are a bit more civilized? The European Union is working on a comprehensive set of crypto regulations called MiCA, or Markets in Crypto Assets. It's like GDPR for crypto, which means it's probably going to be long, complicated, and involve a lot of paperwork. Some countries, like Germany, have been surprisingly crypto-friendly, allowing banks to custody Bitcoin and even experimenting with blockchain technology in their government systems. Others, like France, are taking a more cautious approach, focusing on preventing money laundering and terrorist financing through crypto. Overall, Europe is trying to strike a balance between embracing innovation and protecting consumers. It's a work in progress, but at least they're not resorting to banning memes. Looking at you, China. Section 6 China says not yet, kinda. Navigating the great firewall of crypto. China has a love-hate relationship with crypto. They love the technology but hate the idea of people using it outside their control. It's like that overprotective parent who lets you use the internet but only with parental controls on. They've cracked down on crypto exchanges, banned ICOs, initial coin offerings which are like IPOs for crypto, and even declared Bitcoin mining illegal. It's like they're trying to build a great firewall for crypto, and they're pretty good at it. But here's the thing, China is also leading the way in developing its own digital currency, the digital yuan. They want to be the global leader in blockchain technology, but on their own terms. It's a classic case of do as I say, not as I do, but hey, that's China for you. Section 7, El Salvador's Bitcoin Beach, surfing the waves of adoption. Remember El Salvador, that tiny country in Central America known for its surfing and civil war? Well, now they're known for something else, being the first country to adopt Bitcoin as legal tender. That's right, in El Salvador, you can buy your pupusas and coffee with Bitcoin. They even built a whole Bitcoin beach where you can pay for everything with crypto. It's like a libertarian paradise, except with more volcanoes. Now, it hasn't exactly been smooth sailing. There have been technical glitches, protests, and the price of Bitcoin being, well, Bitcoin, red volatile. But hey, you gotta give them props for trying something different. El Salvador's Bitcoin experiment is being watched closely by other countries. If it works, it could spark a wave of crypto adoption in developing nations. If it fails, well, at least they'll always have surfing. Section 8, the future of finance, a crypto crystal ball. So, what does the future hold for crypto? Is it going to replace fiat currency? Will we all be paying for pizza with Dogecoin? Will I finally be able to buy a Lambo? The short answer is, nobody knows. The long answer is, it's complicated. Cryptocurrency has the potential to revolutionize the financial system. It could make transactions faster, cheaper, and more accessible to people who are currently excluded from traditional banking, but it also comes with risks. Volatility, scams, and lack of regulation are all major concerns. Plus, there's the environmental impact of crypto mining, which is a whole other can of worms. The future of crypto is uncertain, but one thing is for sure, it's going to be interesting. Section 9. So, should you buy The Dip, a millennial's guide to not going broke? Now I know what you're thinking, Hassan, should I throw all my money into Shiba Inu and become a crypto millionaire? And to that I say, please don't. Look, I'm not a financial advisor. Seriously, don't take financial advice from a comedian. But I can tell you this. Crypto is risky, like really risky. It's like riding a roller coaster blindfolded while juggling chainsaws. If you're thinking about investing in crypto, do your research. Start small, diversify your portfolio, and don't invest more than you can afford to lose. And for the love of all that is holy, don't sell your house to buy Bitcoin. Remember, investing is a marathon, not a sprint. Unless you're day trading, in which case it's like sprinting through a minefield while wearing a blindfold made of $100 bills. Section 10. Jokes aside, the need for balance in a decentralized world. All jokes aside, the rise of cryptocurrency is a big deal. It represents a fundamental shift in how we think about money and finance. It's a challenge to the established order, a David versus Goliath battle for the future of the financial system. But like any revolution, it's important to find a balance. We need to embrace the innovation and potential of crypto while also addressing the risks and challenges it poses. That means finding ways to regulate crypto without stifling innovation, protecting consumers without limiting access, and fostering a healthy and sustainable crypto ecosystem. It's a tall order, but it's essential if we want to harness the full potential of this transformative technology. Section 11. Conclusion, crypto is here to stay, but the rules are still being written. So, there you have it. Cryptocurrency, the wild, weird, and wonderful world of digital money. It's a world full of promise and peril, where fortunes are made and lost overnight, and where the only constant is change. Governments are still trying to figure out what to do with it, investors are still trying to figure out how to make money off of it, and the rest of us are just trying to figure out what it all means. But one thing is for sure, crypto is here to stay. The genie is out of the bottle, and there's no putting it back in. The future of finance is being written right now, and it's being written in code. Buckle up, kids, it's going to be a wild ride.